All right, Talking Business is our interview segment on the program Business This Week, and our guest today is joining us virtually from Benin City, looking at quality over quantity, looking at the financial implications and the impact on production and services. Our guest is a business and development analyst, Builder Ambassador Samson Owoha. Thank you so much for joining us on the program Business This Week. It's always a delight to have you on this program. Let's get started. Yeah.
Thank you very much, sir.
Okay. Let's begin by understanding the concept. How would you define the balance or describe the balance between quality and quantity in modern production and services?
All right. The balance between quality and quantity, I would say, is actually industry independent. What I would like to say that is that, for example, the fast-moving consumer goods, which is the FMCG, industries often prioritize on quantity due to their high demand, while the luxury and technology sectors, they emphasizes on quality. So also the modern day business aim on hybrid. When I use the word hybrid, they aim on hybriding quality and quantity, approaching a leverage in the sense that to scale production while they keep the high standard in mind. In a nutshell, whenever we produce, whether quality or quantity, we must definitely consider the satisfaction of the customer. So it all depends on the industry when it comes to quality and quantity.
Okay, thank you so much for this beautiful background that you just gave. Share with us on the key financial implications of prioritizing quality over quantity, especially in manufacturing and service industries. What are the key implications, financial implications?
All right. When we talk about the key financial implication, we are talking about when we invest in quality, we must allocate funds for superior raw materials like skilled labor, research, and compliance. In short-term costs increase, while short-term cost increases, so also we also have to check on the long-term benefit, which includes stronger branding. When you invest on quality in the long term, your brand begins to have a very strong base. For example, there is a philosophy which said that it's better to be first in the heart of customer than to be first in the market. And you can only win that such philosophy when you are aiming on quality. So fewer product defects when you aim on quality, and it reduces returns or recalls from customer complaining that your product is not satisfying them. So companies like Apple and Toyota have demonstrated that quality-focused investment enhance long-term profitability. So what I have to say that whenever you want to invest whenever you want to invest in quality, production is highly demanding. So it's something that you have to budget on as a short term or a long term also.
Okay, let's quickly talk about some sort of comparison between cost and profitability. I know that these are key factors to consider when you're having a conversation around quantity and quality. Is investing in high quality production always more profitable in the long run, or does it pose any financial risks?
Yes, high quality production is usually profitable over time due to the better customer retention, the premium pricing, and lower maintenance. When your product is a high quality, you end up having a very low maintenance in a very long run. So due to that, the customer knowing that when I buy this product, I will have a very low maintenance cost in the long run, they will definitely patronize you, and that will also bring profit to you. However, financial risks exist if the targeted market is not willing to pay the price for quality. We have competitions in the market. So if your competitors are selling less, some persons might definitely want to patronize the one who is selling less. But you that is selling quality, though you may definitely have a customer base. I don't know if you are getting me. Business must actually analyze the consumer preference and the market trading to ensure that they strike right balance between the cost and the perceived value, so that they will not end up producing and they are not selling. So for you to have this, you have to first of all strategize, study the market value. Are the people I'm producing for within need quality, or they are the types that go after quantity? When you now strike a balance, you will now know if you are going for quality or you're going for quantity. But in the nutshell, cost for cost for cost for quality is very high, but the profitability is also high.
What's your perspective on how the global market is responding to the shift towards quality-driven business models?
Honestly, the global market are shifting so fast. They are moving so fast towards quality of production. Like developed market, particularly in Europe and North America, embracing quality driven. Due to the strikers regulations and the evolving consumer preference, emerging markets keep prioritizing affordability. I don't know, but as purchase power increases, demand for the quality product is rising. The sustainability movement is also influencing the global market to favor durable and eco-friendly products over mass production. The global market is actually what the global market really wants in our time now is the quality goods, not just the quantity in the market. No, quality is taking over quantity in the global market behavior.
Let's talk about the consumer because, in any conversation that has to do with manufacturing, production, services, I mean, the consumer, as they say, is always the king. But let's talk about the disposition of consumers in terms of their behavior. Do consumers truly prioritize quality over affordability, or does pricing still dictate purchasing decisions?
Yes, the consumer behavior is a segment we have to consider deeply, in the sense that whether consumer prioritize quality or not, the reputation of the brand is one thing we have to also check. The reputation of the brand and the sustainability. While the middle and the lower income consumer focus on affordability. However, even some budget conscious buyers prefer durable and reliable products, which is why some companies offering affordable quality like ExxonMobil and others are striving. They're the key ones who focus on quality is being perceived value. They always delivering quality at the price consumer find reasonable need for them to purchase it. So that is why, for example, let me use Apple as a case study. If Apple company release any brand of their phone, any product of their phone today, you see their customer, they are running hard to get it because they know this quality. So it's not just about the consumer only. You also have to check the branding and the products that you are giving out to the consumer.
All right, okay, Bida Samson, let me just pause it there for a moment. We'll take a quick break. We'll be back to continue our conversation on Talking Business on Business This Week. Stay tuned. Many thanks again for rejoining us on the program Business This Week, and we're still talking business, and the focus of our conversation is on the comparison between quality and quantity and how it's affecting the global market, the consumer behavior, the cost of commodities, and all of that. But this time, let's zero in on its impact on SMEs and large corporations. Now, we've got our guest here, builder, Ambassador Samson Oha. Thank you for joining us on the program. But how does the quality over quantity approach affect small and medium-sized enterprises, SMEs, compared to large corporations?
Yeah, the large corporation, I would say they have the resources to implement high quality standard at a scale, whereas the SME does not have such finance and resources to maintain such standard and resources in producing quality products. However, the SMC can leverage a craftsmanship and personalized service and niche markets to compete. For instance, the boutique coffee brands focus on quality, sources, and ethical production to differentiate from mass coffee chains. But the large corporation, they have the resources, and these corporations, they plan ahead. They have the long-term budget in producing quality, while the SME, they find it difficult to resource resources to produce quality. So there's a big gap and there's a big difference. And the impact on the SME is very high, unlike the large corporation. The large corporation, you have a lot of directors and investors, while the SME, we have less. When raising capitals in production, they find it difficult, but the SME find it difficult, but the large corporation find it less difficult. And such reason will make them to produce quantity over quality.
What is your take on the sustainability of quality-driven production? How does this align with sustainable and ethical business practices without inflating costs?
Yes, it requires strategic planning. There's a saying that they said when you fail to plan, you plan to fail. Companies can use renewable materials, optimize energy consumption, and also they can also reduce waste to maintain quality without excessive cost. Sustainable brands like Patagonia and Tesla, they prove that ethical production can be profitable. And the government also have a large role to play. The government and the consumer are also rewarding eco-conscious business with incentives and branding quality. So when we talk about strategic planning, if you are planning that, for example, in the year 2026, you are going to produce quality all through, you will not wait for January 1st to start planning ahead. The plan has to begin now. So planning ahead is one of the major key for you to sustain quality production.
Technology is very key in this conversation, particularly with the advent of AI. How would you describe the impact of technology, particularly AI, in its role in improving product and service quality while managing costs?
Artificial intelligence is revolutioning quality control through predictive maintenance, automated and inspections, and it personalized recommendations. For example, AI in car manufacturing detects defects in real time and reduce waste and rework cost. For example, when you are using manual or you are using the manual labor and AI, the cost for AI is very, very low, unlike the manual cost. In such service, AI chatbots enhance customer experience and ensuring consistent and high quality interaction while reducing operational expenses. For example, when you use AI as your customer care to respond to your clients and your customers, you find that you have a very high result, unlike using manual. And also when you are in production firm, when you use in production industry, when you use AI as your production workman, you find that the waste is highly reduced, unlike using manual labor. So the technology and AI in quality enhancement, in quality, is absolutely very, very, very interesting.
There are some challenges, maybe financial or legal, that some companies are likely to face in maintaining high quality standards globally. What's your advice in this regards?
Companies operating globally must navigate differently standard across the region. They must increase cost and complexity, and failure to comply can lead to lawsuits, bans, and or the reputation damage of the brand. So making regulatory adherence a key financial must be a priority to all brands. So compliance with international regulation like the ISO and the FDA and the SE. So all these you must put in place for your brand to remain relevant, for you not to have experienced lawsuits or experience financial cases.
There are concerns about economic growth and employment as it relates to choosing quality over quantity in this whole conversation of driving production. What's your response to the concerns that quality-focused economy really can't drive job creation and overall economic growth?
Sorry, please come again. I didn't get that.
Okay, I'm saying that there are concerns about economic growth and employment. That is to say, the choice of quality over quantity in this conversation on driving production. Can quality-focused economy drive job creation and overall economic growth?
Yes, yes.
So
Quality-driven
how
industry
can that happen? Yeah.
demand a very high speed. Yes, quality-driven industries demand a very high skill level, leading to job creation in sectors like the R&D, manufacturing, and customer service. Countries prioritizing quality, such as Germany and Japan, have strong economies due to their emphasis on engineering, precision, innovation, and high-quality industry. This also boosts exports and strengthens the economic growth. For example, when you know that quality is what your brand is known about, you will work hard to be able to meet up to the demand. And you working hard to meet up to the demand, your salary, your income will also increase. So also taxation in the country will increase, the job rate will also increase. So economic growth and employment, however, all it affects the quality affects economic growth and employment in countries.
What are the biggest challenges businesses are likely to face in transitioning from a quantity-driven to quality-focused model?
Uh, One of the in transition to for quality requires significant investment technology, the workforce training, which is the capacity development, and suppliers management. Our business also face resistance from price-sensitive consumers. So we must educate the market on the value of premium products. Additionally, maintenance consistency in the quality across multiple production is also a very complex challenge. So there's a lot of challenges that face the limitations of quality production, which I just listed above.
Let's talk about the next decade. I mean, what's the future like? Do you foresee more businesses and industries adopting quality over quantity? And what financial strategies will be key to this transformation?
The truth is this, that the shift between quality and quantity. Quality will accelerate due to evolving. You know, the word said that the word evolve, you too must evolve. So the evolving consumer expectation, environmental concerns, and technology advancement businesses will need to invest in automation, lean manufacturing, and the AI-driven quality control to balance costs. Flexible pricing models and strategic partnership will also be essential for making a high-quality product accessible to borders across. So the future, quality is going to take over quantity. It's only those who can withstand the test of time that will be recognized. So some brands will fade out, while those who believe in quality will remain in the market space.
That would mean you know, countries that you could describe as underdeveloped countries and developing countries like Nigeria will ultimately be at the receiving end because of lack of capacity to compete globally. So how do you think such countries can really you know, leverage on this transition from quality driven to, from quantity driven to quality driven in terms of production and services?
The truth is that there is a space for everyone. In every decade, there is a space. Nigeria will find a place where they will belong. But if we want to compete or be among the class who will be recognized at the global market, we have to start yesterday. And if actually we fail to start yesterday, today is not late for us to start. Capacity development have to be put. Awareness of the importance of quality over quantity have to be carried out. And everyone in the industry have to wake up to know the advantage of quality for long-term purpose, not just an immediate profit. You sell quantity and you just make money, whereas those who are selling quality in the long run, they will remain relevant in the market. So Nigerians, those in the production sector, those in the industry, those in the package industry, they all have to wake up to make sure all we produce are quality over quantity.
All right, thank you very much, Builder Ambassador Samson Owoha. Thank you so much for your time and sharing your thoughts with us on this debate about quality over quantity and its implication for the global economy.